Welcome back. On to market conversations now with Anirudh Garg from Invasset PMS, who is joining in. Anirudh, good morning. Thank you for joining in. I was looking at your fact sheet and your Invasset Leaders Fund, and one of your top holdings here is Welspun Corp. And Welspun Corp had a very, very good quarter this time around, and their commentary too being bullish. The stock did well after its results. What do you see in Welspun Corp going ahead? Has it run its course, or the best is yet to come for the company? And if you could share an overall sectoral bit for Welspun Corp and its peers as well.
Yeah, hi. Thank you. Thank you for having me. So I think Welspun Corp was one of our tactical picks. We were tracking the company for a very long period of time. But somewhere now I feel that I think it's running ahead of its expectations and what we had in mind. So we have trimmed our holdings in Welspun Corp a bit.
And where have you added your holdings in the recent times, Anirudh, if you could share those?
Sure. So I think let's talk from a point of view. What sectors do we like going forward in the future? So we are, I think, proponents of relative change. By relative change, I mean that an advantage that a company, sector, or a group that has today did not have earlier. So we are very vocal, and we openly like the stock market infrastructure sector. I think this is somewhere a lot of shift has happened, and these are permanent shifts that take a lot of time, from the FD culture to the equity culture. And somewhere I believe all these participants who are well positioned in the stock market infrastructure space, be it an exchange, be it a depository, be it a good broker or an AMC, I think they're all poised for a good growth from here. So we are, one of our largest holdings is in this sector. Apart from that, we are also bullish on the capex sector in India. I think the capex run is still underway. So anything related to PSU capex like railways, defense infrastructure, or power, or maybe some specialized private capex areas, maybe like hospitals, or maybe something like all these electronic equipment manufacturers is something we like. Apart of them, real estate, public sector banks, private sector banks. I think the worst for India is over. We are at 7.4% growth, and 2.01 lakh crores of GST collections. And going forward, also we feel that there are going to be a couple of more rate cuts in the very near future. So I think India is very well poised for the next couple of years from here.
Got that. Anirudh, hi. Morning. I was just looking, I think as of 31st March, Fortis is your biggest holding, but you also have significant holding in PG Electroplast, so that seems to be the play in the entire EMS. And the other one is Indian Hotels. Now, PG Electroplast, if you could just, compare it, say, vis-a-vis a Dixon, why PG Electroplast? What is its right to win from here on? It's already done well. I think in the last 3 years, the stock return is close to about 150%. So a fair amount of the returns are already there now. What from here? And even Indian Hotels, we have a new, kid on the block, Hotel Leela's. So that's the other choice for investors to play the hotel theme. Have you analyzed Hotel Leela?
Yeah.
And how would it compare with Indian Hotels?
No. So I am not particularly a fan of Hotel Leela. I think not much is left on the table here. When it comes to EMS services like PG Electroplast, our portfolio has gone through a significant change in the last couple of months, and we generally have stages under which a lot of, maybe say 70-80% of the portfolio is changed when we look for the growth, when our growth stage activates. So here, all these stocks that we are talking about, be it Welspun, be it PG Electroplast, we don't hold them in our portfolio going forward. We have added, as I told you, more of stock market infrastructure and capital expenditure names in our portfolio.
So by stock market infrastructure, would CAMS be one of those? CAMS, CDSL, or even BSC for the likes?
Yeah, absolutely. Why not? They're all established in whatever they're doing. And I think barring a couple of internal sectors in between, they're all like monopolies, and there is still a lot for the newer players to catch up. So yes, wherever you find opportunity, maybe a CAMS, maybe a BSC or a CDSL, I think all the names that you mentioned are worth giving a try.
So which are the ones that are not worth giving a try, Anirudh? What are the sectors that you're avoiding right now, or ones that you dislike? Other than the ones, of course, that you mentioned that you have trimmed your allocations or you have exited.
Yeah, so I clearly do not like the auto sector from here. I think there is a huge transition going on in the auto sector. And generally, the demand cycle that is there in an auto, it's a 5 to 6 year demand cycle. And I think the demand cycle is played out. And now there'll be more inventories. People will not be, switching their cars anymore. And as you were rightly mentioning in the show earlier, that the company is also feeling, because as other things get expensive, the pricing pressures also arise. So somewhere we feel that these companies will not be the flavor for us for the next couple of years at least. Auto sector is something that I'm bearish on. Also, I do not like see, everything is growth versus whatever. What is your growth versus what multiples are you getting at? When I look at IT, when I look at FMCG, when I look at consumption, it's somewhere I feel that these sectors have have a problem with growth, due to which the multiples that they're commanding right now are not affordable. I think this is a phase where the market will be awarding growth and growth only. So we are just focusing on where the growth can be possible.
Thank you, Anirudh, for joining in with your thoughts on individual stocks. Growth is the key parameter they're looking for. Get into a break. On the other side, we'll get you excerpts from our exclusive conversation with the Air India CEO, Campbell Wilson, on the other side.